Good evening, everyone. Welcome back to our Maddox Market Musings. Thanks for joining us this evening. Roy and I certainly appreciate you guys taking your time to listen to our thoughts, and we'll go through this meeting this evening and talk briefly about macro. Just I always kind of give a little update on macro, and then we'll go through the stock setups, and we'll go through things that we own um, and things that are on our short list of things to buy. It's been, a bit of a choppy environment starting from October, November, December. Things sort of changed. While we did get a little, chopped up for a couple of months, it does look like things are turning. The S&P is at new highs, the Russell's at all-time highs, the mid caps are at all-time highs. The only one that's really yet to make an all-time high is the Nasdaq, but it's within spin distance of that. So with that, we'll talk about how the environment we see it as setting up for a pretty good perhaps a good quarter, just with the traction we've seen, and that's going to be the focus of tonight. Really, it's going to be the stock setups that are picking up. So, oh, and by the way, we wanted to point out, we got a message. Maybe you see it in the YouTube comments um, that someone is out there, scamming, trying to solicit, pretending to be Roy, on WhatsApp, maybe on Twitter or things like that. We're not reaching out to people like that. Please verify who you're talking to. If you ever wanted to reach out to us and set up a consultation, we do manage money for people. And we hold accounts at Charles Schwab. If you ever, if you're ever questioning something. But this is our contact info right here on this front page. So unless you're getting a message from these exact contacts, these are our phone numbers, our emails, and Twitter handles. Please do not respond to any scammers that are out there. Okay, and if you're new, this is Maddox Market Musings. We started out many years ago just as a community trying to discuss stocks locally in Charlotte. With COVID, we branched out, and now it's all virtual, and we were on Zoom, and now we're doing this YouTube live. We are a community that we focus on technical and fundamental analysis. A lot of our thought processes and work is grounded in How to Make Money in Stocks by William O'Neill. And we use a lot of those resources that William O'Neill created over the years, over the decades of his investment career. He created a lot of educational support on IBD, and we're here to basically just discuss what we're seeing in the market, hopefully share some valuable thoughts, and try to find market leaders. We'll share what we're seeing. Feel free to drop things in the comments, like some stocks that you're looking at, so that we can work together here to find some of these true market leaders that are hopefully gonna set up for us this year. And just so you know, our disclaimers: this is just a discussion, and for a meetup, it's not advice, it's not investment advice. So if you are seeking investment advice or recommendations, consult your financial planner, your financial advisor. None of this is formal advice or recommendations. We're just sharing our thoughts. It's educational. Again, please do your own research. So one of the things that's in William O'Neill's book, this CAN SLIM acronym, this is something we always just review briefly. It is key criteria that Bill O'Neill saw in leading stocks that were important. So each letter stands for something. Current quarterly earnings for the C, annual earnings growth of at least 25%. New companies, new products, new management, different things like that. Supply and demand. So we look for volume clues still, and individual names particularly. We're looking for big spikes in volume because that shows that institutions are piling in. Leaders and laggards. So we want to buy the leader. Obviously, we want to buy the leader. One of the things that jumps out always for the leader or laggard, you'd be much better off, or you would have been much better off for 2024 and 2025, I believe, just to be an Nvidia versus AMD, right? Other things that jump out. There's a lot of these neo cloud providers. Are you going to be in Cipher, which is a $2 billion company that's not as close to new highs, or do you want to be in IREN, which has a lot of liquidity and um, has had a lot of momentum, especially at the end of last year. So that's another thing that another industry that comes to mind. Institutional sponsorship. We'll talk about what are the pension funds and mutual funds? What are the top funds in the country buying? Are they are the stocks owned by 100 mutual funds, or are they owned by 1,000 mutual funds? Is there a lot of room to grow? Are we seeing a lot of the leading mutual funds start building positions, things like that? That's important for us. And market direction, we do focus a lot of that on the trend of the market in general, because the market or stocks are going to in general follow the market. So we do focus a lot on that, just the overall market trend. And for our process overview, just another review here. These are the three pillars that we consider for our investment approach: technical analysis, fundamental analysis, and macro analysis. Technical, we think, being incredibly important. Obviously, fundamentals as well. But technicals kind of can often give you signals before fundamentals necessarily change. So we kind of like to be on the leading edge of that with technical analysis and price action. A lot of times you can understand the fundamentals of a stock first, but then you have to wait for the technicals to agree with you. So these two really are important for each other. And macroeconomic analysis sometimes takes a back seat, just because there's always a lot of reasons to be bearish and there's always a lot of reasons to be bullish. There's always a debate about the macro conditions and if inflation is going to accelerate, or if the Fed's not going to cut, or if the labor market's going to crumble because of AI, or productivity is going to accelerate. There's always a debate, and so sometimes you can get bogged down with a lot of information. But still, we want to be aware, and we'll talk about why we think we're in a really conducive environment coming up this year for stocks. Here's a good list of technical indicators. This is really a good short list of I think everything you need to know for technical analysis. There's price. You don't want to overcomplicate things with too many indicators. This is just about everything that we're going to look at on a technical basis for price. Same with breadth and sentiment and the ratio analysis. So if you're interested in adding some of these tools to your toolbook, take a look at these. Take a screenshot, and you can add that to your list of indicators. Again, fundamentals. We sum it up really easily with this CAN-SLIM acronym, but there's a lot of other details that you can get into. A lot of other work you can get into for just financial statement analysis, things like that, revenue growth, profit margins, things like that. Return on equity, and Market Surge does kind of boil things down relatively simply with things like composite rating, EPS rank, relative strength, and they have a good charting platform that sums up a lot of that. In macroeconomic analysis, we do have some hedge eye research for macro. They are they're a good shop that's available to pretty much to anyone easily online. And they've got us going in this quad one here where inflation's coming down, and we saw an inflation report today. The inflation report probably under the surface was a little bit better than it even showed, but it was I think it was flattish from last month on a year-over-year basis. But there's a lot of reasons to think it's gonna be coming down even further, and probably give the Fed more room to cut than is being priced in at the moment. But it looks like we're in this pretty really good healthy environment where monetary policy is it's leaning accommodative, right? They're pricing in maybe 3 cuts this year, maybe 2, and I think there's a little bit room to even do more if inflation continues to surprise on the downside, which is certainly possible. So I think that's, that I think the macro environment at the moment sets us up for a pretty good, Q1, Q2, and we can't, realistically can't look much further. But most importantly, whatever the view is on macro, this is just a big annotated chart of the Qs. We showed a lot of this last month too, where we walked through kind of how we exited, how we got back in, and then we exited again, and now I've gotten back in, and are about 99% long. But this chart in the Qs is a picture perfect volatility contraction pattern. VCP, that coined by Mark Minervini. And that's picturesque, where we've got this higher low, higher low, higher low, and we are just on the cusp of breaking out to all-time highs in the Qs. Some catalysts that are out there. We've got PPI tomorrow. We already had CPI. They're a little delayed, so not super important probably. But nonetheless, we want to see, the more good data we have, the better. Because again, it just gives them more comfort in cutting. Tomorrow we've got the ruling from the Supreme Court on the tariffs. So we'll see if they're, whatever, some sub-segment of tariffs are constitutional or not. But it's important that, for us, the market looks poised to continue. We're not really focused so much on the news right now. I know a lot of this volatility in the last 3 months was super news driven. But an indicator of a real, of a different environment is just shrugging off news. And just an example of that was Monday morning, right? Yesterday morning, we had that Fed lawsuit, right? They're suing Jerome Powell, and all these questions come up. They arise for objectivity of the Fed, and can they remain apolitical? And no, they cannot if they're being sued by the president, and he's putting a lot of pressure, and it's not great. But the point is, the market ultimately didn't care and closed up on the day. So that's just one little indicator of, okay, that's negative news. What does it mean? The market, is showing its resilience. Here's a look at the FFTY, and it's that what we always say, the barometer of our style. These high growth names, high octane names, got hit really hard in November, and we did a decent job getting out, and then getting back in. And this is the part that maybe got us, increased our drawdown more than we would have liked, is that second little recheck. But since then, the FFTY is back above the 50. We find that, that's important, right? We're not going to ignore that. That seems, or that is absolutely positive. It's a change in trend for us in this FFTY, this style of stocks. And since then, we've continued to kind of add and get some decent traction and some things. So, a lot of stocks are finding support exactly where we, would expect them to find support. And it kind of makes me think that we're entering a better trending environment as stocks are pulling back, finding support at the 21-day, at the 10-day, things like that, turning, taking out highs, having very tight pullbacks. So, this is encouraging, very encouraging for the FFTY to be back above the 50. Okay, here's a review of the CPI. It did come out at 2.7% for December. So I guess we're all caught up, which is nice, after the shutdown. But it's trending down, right, from 3 to 2.8, 2.7, 2.7. There was a little bit of an uptick in shelter, I noticed. That was up 0.4% month over month. That's a pretty large number. And maybe there's something seasonal to it. I'm not sure, but that's a pretty large move for shelter. And I expect that definitely to normalize and be up 0.2% or less, really, next month. And with that, shelter continues to be the really heavy, slow moving weight that's pushing down on CPI, and will continue to do so for, I don't know, the next 6 months to a year. So, we've been talking about that a lot, but that was a bit of an anomaly, I think, in this report, where it actually was a bad guy. And so we ended up with 2.7, but we'll see that coming down further. 2.4, that's, God, that's really, 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 really low there, and very close to that, to that target. Here's a look at just, what it looks like, why it's good, right? CPI is coming down, wage growth is outpacing CPI right now, which is great. That's real wage growth. When your wages are up more than the price level. Here's a look at that just to give you a better sense of real wage growth, real wages minus CPI. So you can see that's been positive in that positive 1% area for a couple of years, or I guess 3 years now. So still very, healthy for the average worker. That's great. Meanwhile, this is the other, side of the coin for the Federal Reserve, and unemployment has steadily been increasing for a couple of years. It continues to drift up. It is, it's getting to a point where it seems logical that this is a higher risk than CPI. So this is drifting up, but not super alarming. It doesn't sound like there's people being fired, but there's been a slowdown in hiring, and a lot of that we'll maybe see in retrospect, and people assume right now is just AI driven productivity, right? Like people aren't trying to hire as many people; they're just trying to implement AI and increase productivity for all their workers. And what happens with that is that does lead to real wage growth as well, right? If you're a more productive employee now, that is how it translates for you. The benefit, trickles to you as well. This is the U.S. leading economic index. So I kind of use this loosely just to have an idea of where the economy is going, right? This is a long history of this data point. We've been negative in this leading economic index on a year-over-year basis for a few years. It looked like we were about to take off. We had this little setback, which probably was induced from the tariff increases right here, where we had that setback in the LEI, and it came below this 5% level, which they mark as sort of a recession worry indicator. But right now we turned up, and I think we're back above that, and we will see. I hope, hopefully Trump doesn't throw any more wrenches at us, and we can just have kind of a steady state for some time. And so with this LEI, increasing, that'd be nice to see it actually positive, and that would be, that's a lot of what will probably lead to the broadening out of the stock market, and what we've already kind of seen of late with the Russell and things like, transports and regional banks and housing and all these other, industrials, all these different things participating in the rally. This is probably a large part of why that's happening. And this is something to watch. Same with the PMI. I think that PMI has been depressed and in contraction for a very long time. I don't have that in this presentation, but that's another indicator similarly that needs to turn up and turn into that 50 plus expansion range for that indicator. Okay, so with the sort of labor market and inflation and growth outlook, that kind of feeds into the Fed, right? And we're always going to be pretty focused on the Fed. Here's what it looks like. So right now, the current Fed funds rate is 350 to 375 basis points. This morning, there was a 97% chance they do not cut at all next week. So nothing to look into next week. Here's the path, the expected Fed rate path over the next 12 months. And right now we're talking at 3.61%. So, staying steady in January. All the way to next January, where we're at that 3 to 3.25%. So actually, as of right now, this Fed fund futures curve is only pricing in 2 cuts. I think that if you get that January data point like we had from the Fed Nowcast, if CPI comes in at 2.4%, There's going to be, a good argument to get that first cut sooner, and perhaps more cuts to come. I mean, we see, we see what Trump's trying to do with affordability. A lot of those policies he's announcing are not going to be effective. Like, the 10% cap on credit card fees is not realistic. It's not going to happen. But the one thing he can perhaps control is, or not control, but influence is oil prices, as long as he's not going to war. But if he encourage more, drilling and oil goes into everything and all that, it's possible that he, that can continue to be a positive for CPI to the downside, um, with oil supply. Okay, and just quickly, I threw this in, this 10-year Treasury rate. If you're ever sitting here wondering about news and you're like, wow, the Fed is under attack. What does that mean? I didn't really know. I didn't know how the market would react. Obviously, it's not a great development. You don't want to see that kind of pressure. You don't want political pressure at the Fed. But the fact is, this 10-year hasn't really budged. What I would assume, the reason why I pulled this up is, if there's ever a question about Fed credibility, or if the Fed is doing the wrong thing, if the Fed gets too easy, we can always come back to this. If the Fed starts easing and Trump puts in a puppet and they cut rates to zero, the thing that's going to react is this 10-year. If the 10-year is, if this thing goes up to 4.5%, 5%, that's going to be telling you, well, this is not good for markets. This is not smart for Trump to have, pushed so aggressively to have the Fed make a mistake like that to accelerate inflation, over the next couple of years. So keep an eye on the 10-year if you're ever thinking, if you're ever wondering, is the Fed going to lose control? Is Trump really going to have that much of an impact? The market will not let them get a free pass, right? You can't just put rates to zero and not expect a little bit of a governor on the longer end of the curve to say, hey, you're running things too hot. So anyways, this is something to remember. It sifts through a lot of that noise that might be happening on the short end. Ultimately, the short end, not super important. Probably, maybe in the most important aspect of it is, if you go to 0% and no one's earning anything on yield, you just continue to push things. You just continue to push money into riskier assets. So that's the main lever of that, maybe that short end of the curve coming down. But the 10-year is really, a good indicator for economic reality, as far as growth, inflation, and U.S. government, I guess, premiums. So I don't know. With that, I guess that's all I have on the kind of macro front, and we don't want to spend too much time today on that. We want to jump into stocks, and so I'm going to pull up Market Surge, and Roy's going to lead us in the next segment, focused on stocks. All right.
Thank you, Wes. And if you will, expand that and pull up the portfolio, Wes. There you go.
Yeah.
And make sure that's in alphabetical order for us.
Sure. App. Yep.
Again, thank you, everyone. Thank you so much for attending tonight. It's always our pleasure guiding you during these monthly meetings, and in which we share our ideas and you share your ideas back to us. We certainly appreciate that. We get as much from it as you do as well. So thank you again for attending. It's many times over the last year, we really talked a lot about the macro, but for the first time in months and months and months, we do see a proliferation of stock setups that are setting up and that are achieving stock patterns that consistently work for us. So we're excited about this. We see, we're getting some traction in the market, and we see a number of groups participating, and we think this is a foretaste of what's coming. But, of course, it's going to always be volatile in the market. We have no preconceived notions in terms of where's the market going to go this year. Will we be up 10 or 20%? Will we be down 10 or 20%? One thing for sure, we will have some volatility. So we're going to try to help you navigate through the volatility the way that we have over the last 7 years. We aim to help you achieve that this year as well. So we were closing out the year. We were very, very lightly invested. We were only 15% invested going into the last couple of days of the year. And we've moved now from a 15% long position to really basically a 99% investment position in the last 8 or 9 days. So we've done that because we've seen the things that we wanted to see. And as we go through some of these stocks, you'll see what we're looking for. This is our portfolio. You can take a screenshot of the portfolio. We normally want to have 15 to 17 positions on the books, sometimes 20, and then narrow those down and sell our worst performers and hold our best performers. But we have found that a concentrated portfolio for us managing money consistently, if we have about 15 positions, 10 or 15 positions in a great market where you can clearly identify the 10 leading stocks in the market, it pays to have all your money in those individual stocks. But, when the market uptrend is nascent and is just beginning or is choppy, we find that, ETFs provide some market exposure without the volatility that you have in individual stocks. So that's why we've constructed the portfolio carefully right now, so that we have really 9 individual stocks and 5 ETFs in the portfolio right now. So we'll just go through these and point out some of the financial reasons that we own them, and along with the technical criteria that we're looking at as well. So Wes, pull up AppLovin.
Yep.
What strikes us about the leading stocks in the market it's the earnings growth. And you can see that this stock has great earnings and revenue growth. You can see the quarterly numbers or triple digit numbers. And again, O'Neill, his basic premise was you wanted to have at least 25% earnings growth. But we have found that in the greatest performers, the true market leaders, that oftentimes they might have triple digit numbers. And so this is what's attracted us to this particular stock, AppLovin. So you can see the earnings numbers, 98% last quarter, the quarter before, 153%, 149%, 253%. And you can see the relative strength based on the chart is 95. So relative strength of 95, and it's got a composite rating of 98. So fundamentally, it's very, very strong. You can see the stock pulled in there in October, and you can see a clear double bottom base that's been formulating on the chart. And, this chart's, in buy territory. We actually entered this stock about 4 or 5 days ago, right when the stock was right crossing the 50-day moving average. So that's what got us back on board with the stock. So we've got high hopes for the position. You can see great revenue growth down below as well. And this is really extraordinary revenue growth, 60, 68%, 77%, 71%. So you got, tremendous revenue growth. And I would also point out that you've got accelerating numbers. One of the things that O'Neill found is that the great leading stocks have sometimes, occasionally, the rare ones, the great ones, have 3 consecutive quarters where revenues increase and earnings increase. And this fits the bill. and it's also near a 52-week high, and it's also near an all-time high as well. So we've got high hopes. It looks great as you expand and look at the weekly and monthly charts. So this is one of our top positions here. We've started off very, very well with a profit. Bloom Energy is probably this is really one of the most attractive stocks that we have. We bought this stock back breaking above the 50, right there where Wesley is has pointing out. That's where the character of the stock, the technical position changed, where the stock was in a very, very choppy environment, put in that double bottom cup, and you can see where it undercut.
Yep.
And so it's got a really a double bottom pattern there where it broke out at 119.90. Looks like 119.91 officially.
Yep.
But we bought this stock again
Here
because
yeah,
we bought that stock because of the fundamentals of the company, which it provides these bloom boxes, and these bloom boxes are they're devices that are chemically induced based on fuel cell technology, so that you can just plug them into the data centers. And it's been our research has shown that that it's about 20% cheaper than having generators. And the other option, of course, is GEV's generators, which gas turbines, which are used to power most of these data centers. And this is an alternative that's in fact cheaper and cleaner, and that doesn't go down. It's 99.999% effective in terms of running 100% of the time, versus the generators that you have to take offline occasionally and have redundancy and backup plans. You avoid that with this type of technology. Yeah, Wes, did you want to say something?
No, I don't. I mean, I think you've got it right. I mean, yeah, there it is. New tech that seems to be working. Big announcement, I guess, 4 days ago. That was a big, like, $3 billion announcement with AEP.
Yeah.
They're going to be important too for the next 5 years. You saw Trump's tweet too yesterday about energy and how he doesn't want electricity prices to go up. These AI factories need to be kind of self-contained, and this is an important way to do it. Just batteries, smaller turbines, solar, a variety of things, but they seem to be able to deliver these things pretty quickly and clean. And Roy, you happened to not mention this one other thing. We're not the technical experts, but apparently the voltage of it, the direct voltage, is like happens to be perfect for like the Vera Rubin next generation of data center GPUs. So
yeah,
that's important versus the alternating current that typical power uses, and they have this direct current thing that just happens to be perfect. So it's been many, many, many years, right? Like a decade of working on this tech, and now it just happens to come together for them, and they've got this earnings, these really good earnings prospects.
And let me point out also, guys, and I think this is very important. Notice the 45. Notice the nice sustainable uptrend there from July to when the stock peaked in November. So this stock broke out at 30. Traveled all the way down to traveled all the way up to 147. So you're in an uptrend, and now you're in an uptrend, and you had this major correction in all these growth stocks that were profiled in the FFTY. All the hot stocks, and we'll look at a number of these. But these, when a stock has a movement like this and then corrects and comes all the way back, that is really telling you that it's got amazing strength. You normally would not like a stock that's had such a correction. However, it was pretty violent in terms of the the decline there from October to December in growth stocks. So it's come all the way back. But that's the idea. We're looking for those stocks that were prior leaders that now that have come all the way back and that are resuming their leadership. So we think that this potentially has won. Wes, if you'll point out the earnings projections over there on the left-hand side,
Yeah.
the estimates are 113% this year, $1.09. Now, we've read some research, and of course, you've got many different analysts on Wall Street. Everybody's projecting various things, but the research that we've read recently is that Bloom Energy can potentially do $20 in earnings in the next 3 to 4 years, and you put a multiple on that of $25, and that's a $600 stock. So we're not saying that the stock is going to $500 or $600, but as they continue to build and to build out and sign deals, we think that the earnings projections are going to increase dramatically in the future, and earnings projections move stock prices. So that's why we're in this particular position with this stock.
And we'll see. This 26 number probably doesn't include that recent announcement quite yet, like from 4 days ago. And we'll see what happens when 2027 numbers come out. That's always nice to see. And like you said, if it just the fact that we can reasonably get to a point where it could be a $500, $600 stock. That's not saying we're going to get a 5x out of this by any means. But just the fact that can happen, it makes a double more likely. And we're very happy to have a double even. So it's nice to just have, we want to have these stocks with the fundamentals that even make a 5x sound achievable. And
you might expect the stock to handle right here, it's to put in this right hand side of the cup.
That's right.
It may or may not, but we're in the position. If it handles, that would be great, because if this stock handles, we're going to go from a 5% position to a 10% position. And it would be ideal if it got very tight for 5 to 7 days, and then it took out that 147.87 pivot there on the left. That would be ideal. So, for our positions, we want to, really a half position for us is 5%, but we'd like to take it to a 10% if we've got a profit and if the stock sets up again. So that's how we would handle this particular stock. Okay, the next, Wes, why don't you bring us up to speed on this one?
Oh, I mean, well, it's we're not in the weeds so much on this, but it's a like a crypto lending platform, and it's a recent IPO, most importantly in the IPO base where it broke out at 50. So we are in the stock. I don't know. We might be in it. I think we might have been in it, bought it when it was down this day, originally. And, had this really nasty shakeout. I didn't see the news. I know they reported some preliminary numbers. They're so young. They're growing really, really fast. The loan book's growing like crazy. They announced that preliminary results, like as far as loan book metrics, early that morning, and the stock didn't react actually at all until randomly at like 2 p.m. And we, it's kind of inexplicable. We didn't understand. We didn't know why. We did not get shaken out of it because, we're seeing these stocks find support over and over again the last few weeks. So, we gave it an opportunity here to hold. And while it did get a little squirrely, $58 to $48, just in a couple hours, you always, or if you can, it's always good to see how they close. And it closed at the 10-day, well off the low, gave us some encouragement. And, we believe this is probably going to track a little bit with crypto, right? And we are, with that in mind, crypto is shaping up really nicely. So that's part of it too. That kind of gave me us a little bit of confidence to hold on to it right there. Because in reality, this has an opportunity to outperform, Bitcoin considerably. Given it's a new IPO base, it's going to be these things have a potential to get very hot. It just broke out. It would not be, it would not be out of the question for it to go from 50 to 100. It has no overhead. Just while Bitcoin has a lot of overhead, this has no overhead. And that's really what allows the stocks to go crazy to the upside. And so, this is a one of the top picks that we've got. Of course, everything we own is really a top, obviously it's a top pick. That's why it made it in here. But this is quite interesting, especially for it's going to move a multiple of crypto. And if you're still following crypto, you've probably seen it turn, and Bitcoin maybe going, it's above 95,000, and it might be, it looks like it put in a bottom there. So, yeah, this is again, high octane, high volatility. You want to size this appropriately. It's really hard a lot of times to have these IPOs with more than a 5% position. So, we'll see if we ever do, if it does give us an opportunity to make it larger, but it may just end up being a 5% position the whole way up, just because you might get these 14% down days or these 10% down days multiple times on the way up. So keep that in mind. This is a super risky one, but we're always looking for new merchandise on the next legs up in bull markets. A lot of that new merchandise has can be the top performer. So we're in it. It's got good numbers, 55% revenue growth, 223% earnings growth the last quarter. So good fundamentals right here. And if the crypto environment is turning right here, right now, this has a lot of potential.
Thanks, Wes. The next one is Corning. And Corning, of course, and this is what we, again, in terms of the setups, this is what we're talking about where, where Corning attempted to break out, went to a new high, got it pulled in there. You can see in November and December, and it really pretty much held the 50-day recently. And that's why, we're very, very interested in the company. Most of you know Corning from, from glass and fiber to the premises and so forth. They're part of that, they're part of that arena that they occupy the space that Sienna and LITE and Coherent operate in, and that's in the that's in the optical area. And really, this is the next stage of the build out in the data center companies. It's in the optical space, and those are the stocks that are pretty much leading the way. And we chose Corning because of its maturity and because of its solid numbers and past history. We think they'll continue to be a big winner in this category. You can see this is really a blue chip stock with 20% numbers that we have high hopes for. Again, notice that this stock, when it broke out, when this stock broke out there at 60, in that nice uptrend, again, we're attracted to those companies that were in uptrends before the correction. And you can see the correction over the last 3 months, and we think now it's game on again. And we have high hopes for these stocks that were in uptrends before, that are showing themselves and that have snapped back. So that's why we're embracing this particular stock. Next. You're all familiar with Robinhood. Again, you can see the same pattern that repeats itself. The stock was one of the leaders last year for half the year. The major correction from 153 down to 102 from the low. And we use stops on all of our positions. We don't want to lose more than 1% of our capital on any individual trade. And we recently re-entered this position just in the last couple of days. It is below the 50-day, but we see we see the stock turning up here. A really validation for us technically would be if this stock breaks above the 50-day, and we would expect that tomorrow because of the way the Bitcoin is trading aftermarket and the way it traded today, as it seems to be putting in the bottom. We think this is your young man's Charles Schwab, and it's run by a very innovative CEO. And we think that the best is ahead of this particular company. We think that you got great leadership. That's the leadership's running the company like an IPO, and we think that they're going to basically amass millions and millions and millions of clients over the years. So it's one of our favorite positions, one of our favorite companies. And you can see, again, the triple digit earnings numbers that we favor. It is certainly delivering, and it's very, very strong position.
It is. I'll talk, I guess, if you want, Roy, on this one. And this is in that Neo Cloud group that basically they used to be Bitcoin miners, all these things, and now they're realizing, oh, we're pretty good at setting up massive warehouses of GPUs, and they're building these data centers and then leasing them to Meta, Microsoft, Google, and stuff like that. IREN was a massive leader and winner for a few months at the end of the year. We really never got into it because well, it was hard to buy. This was really the change in character when it happened right here, and I know it was on our radar, and we watched from the sidelines, and this thing went up from 10 to $17 in 8 days, up 70%, and then you just thought it had gotten away, and then it just powered ahead, incredibly. Just like Roy said a bunch of times, we're looking for those prior uptrends. Who was in a prior uptrend before the correction? Well, this one had a nasty correction, right down over 50% from 77 to 33. And now it's turning above the 50. And so that was when we bought it yesterday, above the 50. It squatted on you right there, but there's a lot of liquidity in this stock. It's trading 40 million shares a day on, at $50. So, billions of dollars are being traded here, 20 billion. Or is that $2 billion a day? And so it's clearly showing it's got liquidity. It's a leader. This space, we talked about there's healthy debate, I think last month or 2 months ago, about is it a good business model? Maybe, but the point is they're signing deals. The stock is telling you that there's institutional interest with the heavy volume. And we picked this one. There are a few others that we were considering, but above the 50, we took this one. MBIS is above the 50. APLD, we were wondering, this is the one that's closest to an all-time high, which maybe warrants interest as well. But they reported and they've kind of gapped up on earnings, and this one looks like it's maybe starting its move just above the 50. So for us, we took that as a buy signal yesterday, and took a 5% position right there. But it's the same. Yeah, it's the same chart as Bloom Energy. Same idea as Robinhood. They were previously in these uptrends, and man, that's you shook a lot of people out with that horrible correction. And there's overhead, but what you saw with Bloom Energy too, especially with the numbers right here, gosh, triple digits. We the ones that have triple digit numbers really have potential to outperform. You could eat through that overhead pretty quickly. Like Bloom Energy got through almost all of its overhead in 4 or 5 days, and this looks encouraging. The action here is encouraging for IREN.
And notice the triple digit accelerated numbers down at the bottom, Wes.
Yeah,
Those the last 4 quarters from
huge.
revenues and then earnings.
Yeah, it's massive. So, it's not easy, and not everyone can just stand up a data center. It's a lot of work, and they seem, they're finding there was a big shortage, right? Or there's a lot of excess demand, and Meta and Microsoft are just farming out that expertise a little bit to some of these guys that have become experts at standing up huge data centers. So pretty impressive. And I don't know, this question came up. What if all these Bitcoin miners are converting into data centers, who's mining Bitcoins? I don't know. Maybe they are too. Maybe they're doing some of both. I really don't know. Uh, Anyways.
And we own the mid cap, the MDY. We bought the mid cap. You can see the mid cap is just breaking out. So there's it's going to be very interesting to see what happens. There's we're running some analysis right now comparing the Mag 7 to the small cap universe and the mid cap universe right now. It's preliminarily, it is possible that the Mag 7, we're going to have a rotation out of the Mag 7 into the small cap and mid cap area. And, you can certainly see, strong technical action here in the mid cap area. Wes, if you expand that so we can see the weekly and the monthly on the mid cap index. So you can see that this is, really going back for 5 years. This, it's going sideways for forever. And it's now just breaking out to an all-time high. And that's why we're attracted to the position and why we put this position on in the last week as the stock, as the ETF moved to all-time high territory. So we think that technically, the stock is, or the index, the ETF is, on its way to sustaining, a nice uptrend the way that it did there. And you can see in 2020 to 2021, you had a major move where you got a double, in this particular index right there. So we're looking for rotational action to take place, and the NDY and the IWM to benefit from this rotational space. So the mid cap arena, it's smaller. Again, with the small cap arena, it's smaller than these large cap growth companies, but we think a safe way of playing it is just using the ETF, and that's why we just initiated the position in this on that first down day there, 1, 2, 3, 4, 5, 6
Right
days
there.
ago, right here.
Yeah.
That's where we initiated the position, right there.
Yep. Definitely, definitely nice to have diversification in that, away from some stuff. Okay, and I won't talk too much about it. This is, we're taking a different approach on a lot of these stocks that some of these stocks we bought. We really wanted to buy them above the 50. Since then I think we did buy it right there as we thought it was above the 50, and it's squatted and it's really chopped around right at all these moving averages. It's a highly contested stock. It's just sitting here at the 50-day. I'm wondering, maybe we're in this period right here where it was chopping at the 50-day for 2 to 3 weeks, but I still view it. It's still viewed as a leader. It's the institutional leader in AI. Pure AI, and the prospects have not deteriorated at all. You see the acceleration, in revenue growth here. I mean, massive acceleration. Last quarter, I think you're going to see it again in the 70s for revenue growth. Next quarter, Wall Street is somewhat coming around. There've been a couple of upgrades recently. It's been a hated stock where most people had sell ratings on it because it's expensive. But it's trading at 180 times price to earnings on growing 75% in revenue next quarter probably, and it's just not really. I understand it's expensive, but it's executing, and the margins are incredible, and all this stuff. So I continue to view it as the number one beneficiary of implementing actual AI, right? Beyond chatbots, what can you actually do with AI right now? Who do you call? You call them still. They're absolutely the leader still. Relentless. There's a lot of government traction that could be happening too. There's a lot of big potential contracts. They have some of these open-ended government contracts that are basically based on usage, where they could make $50 million with 10,000 people using it, or they can make $5 billion with 100,000 people using it. So there's anyways, they're getting a lot of benefits from both things, commercial and now government more recently too. So that's really nice to see both of their divisions firing, on all cylinders and everything. So, look for further acceleration, I think, next quarter from that 63. And again, we're talking, big numbers, big software company, software, being a much better compounding business than perhaps some of these gadgets and gizmos and chip that are more cyclical with chips. So anyways, I still like it. Maybe we'll average up and press it too when it takes out these pivots or whatever. But for now, nothing to do with it. I'm kind of content to wait to wait on this one to work. Although it's been a laggard since we bought it for the last 5 days. But anyways, no big deal.
The cues are breaking out of this beautiful symmetrical triangle. This beautiful VCP that Wes mentioned earlier. It's presenting itself. You can see the stock took out. The cues actually took out 625 and change. The last couple of days, the last 2 to 3 days, you can see it's breaking this subtly. It's breaking this downtrend where it looks like it's about to break out of this consolidation pattern, and that really suggests really higher prices. Higher prices ahead. We think that that's the last vestibule of having all the indexes uniformly participate at the same time, and that's why we're seeing just these consolidations that are really quite nice. And what we want to see on the chart, they're starting to show themselves with this, volatility contraction pattern. It's highly bullish. And if you're in this ETF, you could easily press it there at 629.21, taking that pivot out, and then taking out that 637 period right there. That's where you would press, you would average up if you're so inclined. That would be the proper way that we believe it should be handled. So highly bullish right now. We're sort of in a Goldilocks macro environment where inflation's coming down, growth is expanding. Really, if you take a look at the GDP growth from the Atlanta Fed, and a number of people in the government are calling for GDP growth of like 7%, 7 or 8%, in the next year, which is unbelievably strong. And with the low interest rate environment, that's just kindling that we need to put on the fire to get it really going. So very highly bullish, highly positive in terms of the way this index is setting up currently.
Yep. Oh. Okay, here's Reddit. Yeah, another one we own. We were buying this on relative strength, I think, this day. when when the market was down, and this was showing green almost the entire day for Reddit. The following day, man, we had another figure-esque shakeout. Um, same thing. Didn't want to get scared out. Want to give these things chances, especially when these moves seem a little random. Someone just decides to dump it. Okay, great. It did exactly what we had expected to do. It held at the 21, closed off the low. That's that is, I guess I'd rather not have the shakeout necessarily, but the fact is it does make for a more durable chart, durable move upward after that. But that's exactly how you want strong stocks to behave when they do have these shakeouts. You tap the 21 day for 5 minutes, and then you rebound the same day, and you're well off the lows. And so, um, we had a nice inside day yesterday, and got some momentum today, up 6%. So a really strong day. On much better volume than yesterday too. So, saw some buyers step in for sure. We're looking at this for the numbers as well. I mean, again, everything that we're looking at, or a lot of what we're looking at, we see these, greater than 50% at a minimum revenue growth is a lot of what we're looking at here. In triple digit earnings growth. These stocks are always very interesting to us too. When you look back at the history, it's a relatively recent IPO, but negative, 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 right? So they just turned profitable. For the first year this year. That's sort of that's a big milestone for any IPO turning profitable. Um, and it's 94 relative strength. It's all these things that have kind of got us in that position where it's been on our radar for some time, and we try to position again. So we've got a 5% position. Same thing, we'll press anything that we own as long as it gives us a profit and consolidates nicely. So yeah, we're in here. I know there's been speculation too with ChatGPT if it's making people if it's lowering traffic from Reddit. There's been maybe a couple of different headlines in the last 6 months about that. It's unclear, but I guess they're signing deals with ChatGPT too to license, I think, information that they're scraping from Reddit, because it's a very big source of ChatGPT's information and knowledge. So, anyways, it's acting good shakeout. We own it. Anything to add, Roy?
Microsoft and ChatGPT or their OpenAI or their largest clients. That's expected to grow. The stock's setting up based on with the revenue and earnings growth to break out to an all-time high. So it's right, this stock's right on the cusp of going to new high territory.
Yeah. Like, I won't make it. I don't know if you have to talk on the SPY. I'll let you talk on Tesla next, but I'll just briefly. I'll talk quickly about Spider. We own some SPY. Okay, it's just to add some. We always say ballast to the portfolio. It's a 15% position. It's just to give us market exposure, lower volatility. Occasionally we're going to have some bad days, and what's going to happen is IRIN's going to be in 10% or something, and Figure's going to be in 6%, but the Spider's going to be flat. And so we do like to have this position. It's diversified. It's not super tech heavy. Maybe it's a placeholder for now. If we can get super aggressive, maybe maybe there's an opportunity to sell this and press our winners even greater. But it's not urgent. This is going to give us good returns. The S&P is such a great investment vehicle over time, and it's right on near all-time highs, and it's not we're not losing sleep holding the S&P at all. So we like to have some of it.
Tesla by far is widely known, in the investment space, is the premier AI company really in the world today, and primarily through auto taxis and robotics. they really have a chance to really change the landscape in terms of the way that we live and work and so forth. You can see Tesla is above the 50 day moving average. It's pretty much squatting here. You're going to need some type of catalyst, and that catalyst is undoubtedly it's going to be news regarding the launching of additional cities for robo taxis. But we really think that that Tesla's going to have millions and millions of robo taxis on the road, in the next 4 to 5 years, and pioneered by their FSD driving technology. We think that they're clearly the leader, in this space, and they know how to scale. So we think that's very important. We think they'll dominate this market before it's over. We think, humanoids and robotics, it's definitely coming, but we think that the ability to mass produce those might be a little bit longer than it, it may take later on, in 2026, 2027 to fully implement, the production scale to have the humanoid robots out and be a fixture in the workplace, in the manufacturing facilities, and in the home environment as well. But we think that you can clearly see it's very close to breaking out to an all-time high. It's going to need a catalyst. Now, before the numbers and the news is going to be the catalyst. It's not going to be the numbers, because it's going to take. They're just starting, and they're just starting with the implementation of robo-taxis. So you're going from basically zero in revenues. You'll be growing at 100% per quarter for the next 4 to 5 years, and that's really what's going to drive the stock price moving forward. But we're in the position, above 500, we'll probably press the position and go from 5% to 10%. And we're just getting our feet, getting a toe in right now. We like the way that it's acting currently, and we will press it, if the stock moves to all-time high territory.
Yeah. Okay. I think we've got, what do we have? Oh, yeah, more indexes we have. We see the theme. Okay, we see the Russell outperformance, the small caps. We ended up buying this. Vanguard small cap. We kind of already touched on that. The rotation's interesting, definitely a broadening of the market. We talked about the Mag 7, lagging and some other things taking over. The rotation, a lot of the rotation has already happened. Meta is down quite a bit. I'll just, add, like, Microsoft is down quite a bit. Already, from the Mag 7, Apple, has gotten hit. Netflix has gotten crushed. Things like that. Nvidia has been lagging for 6 months. But Google being the number one stock right now, the Mag 7, at all-time high. So, so absolutely, the theme is real. It's happening, and you always wonder what in the world, like, how do you get what happens if you sell 5% of Google? Can the Russell just go bananas? Because it's, I'm sure 5% of Google is probably a really hefty portion of the Russell 2000 market cap. So anyways, that's why we have this, I guess VB is currently what we own for small cap exposure.
And the last position that we have is the XBI. We've often talked over the last few months about biotech, particularly leading this market. The problem with biotech, however, is the volatility in these individual names. For example, there are a number of these stocks that look great that just imploded. For example, TVTX today was it was screening very, very well on our list of new leaders in the biotech area, and news came out and the stock collapsed. You can see that. ALNY was the leading stock with great numbers. And you can see that stock has been in a corrective fashion. And then that stock was down big. You can see it had tremendous numbers too down there at the bottom. So it had great earnings growth, great revenue growth, and yet it had a disappointing reaction to news yesterday. RARE was another right out of the, just, well, the stock actually didn't have a great technical picture, but you can see that stock came in and got crushed in one day. LGND today, and that was on our screens, LGND. You can see that stock was powering ahead right on the cusp of breaking out, and then the stock comes in big on news today. STOK was,
Yep.
yeah.
Go ahead.
STOK was in the top 5 of the FFTY in that index. You can see that came in briskly yesterday, and so that's the volatility that that WGS is another one that looked great. Look at the numbers down there at the bottom. We thought, and this is in the genetic testing area. When the stock broke out to a 52-week high there at 170, we thought it was off to the races. They promptly sold the stock on the false breakout, and then the news the last 2 days. You can see when all was said and done, $1.70 all the way down to $1.10 is a pretty nasty experience. If you're holding the position, and we've pretty much decided that we're just going to buy the IBB and the XBI. Again, we own the XBI. The IBB is really the larger cap. It's got Regeneron, Amgen, Gilead, Vertex Pharmaceuticals. That's in the IBB, and the XBI's got a lot of the smaller, more aggressive growth biotechs. And so we've taken a position in the XBI, and again, it's quite possible that we might, if it sets up, we might add that IBB and have a 10% position in biotech just in the ETF area right there.
Yep, that's everything we hold.
If you'll pull up. Wes, pull up like our buy list, and this is just sort of a watch list that we update, every week or two, and you can do a screenshot on this list, and you can kind of see what we're, stocks that are screening pretty well for us, and it's really sort of a watch list for us. So you might screenshot of that.
Yeah.
And there are a couple of themes that we wanted to talk about again tonight that we don't own. We see that, again, with I saw mortgage rates were at 3-year lows yesterday. And so, obviously, if mortgage rates move lower, you can have mortgage refinancing take place. You can see the home builders are just like it's the last 3 days. See where they've broken out and picked up. So there's the catalyst. The last 3 days where now it looks very similar to that Bloom Energy, where you've got this you got this breakout, more momentum that's just showing itself right here. If you look at some individual names like Toll Brothers, TOL, you can see that this has got a really nice pattern here, and this is the high end market, Toll Brothers. And you can see it's breaking out of this 5-month base, as we speak. And an interesting way of playing this would be Rocket Mortgage, which is RKT. And you can see this is, you can see where this is really right on the cusp of breaking out. And we're interested in potentially adding adding this into the portfolio because they are the leader. They're certainly the leader. In the U.S. marketplace, they own Rocket Mortgage. They bought research firm, I think, Redfin, and they also bought Mr. Cooper, which is the back office. So they have all areas covered, and being the leading mortgage originator, we think it would be highly unusual if they don't participate and lead the market from here. So Rocket Mortgage is interesting to us. Yeah, Wes.
Sorry. And by the way, that news that hit on that day when everything was up, it's that Trump did say he wants Fannie Mae and Freddie Mac to buy mortgage bonds. He said $200 billion of mortgage bonds. And, so much of what he does, you don't know if it's even feasible, if it's realistic, does he have the authority, whatever. But the market, itself is telling you, okay, well, I guess it is meaningful, or he can do it or something, because we saw the home builders rally quite a bit. And, these mortgage rates, like you mentioned, Roy, the 3-year low, they hit 6% on the 30-year. And you can see that break lower here. So it's been a long time since we've seen something at 6%. So the announcement, while, I was still questioning it, the market reacted positively, and that would squeeze that spread to the 10-year yield, like we've talked about. We talked about how the spread to the mortgage rate versus the 10-year is really high, and so maybe this is going to push down on it. If Fannie Mae and Freddie Mac can actually do that, and apparently they can. So I don't know, something to keep in mind, something to monitor. The market has spoken, lots of volume. So a theme that might benefit going forward.
Show the earnings projections for RKT for this year. Over there on the left, 256%. So you've got tremendous growth that's expected this year. So that's what's attractive to us, the future earnings power. So that's clearly interesting to us. A theme that's also got our attention. It's the space area, and there are a number of stocks that are sort of leading, in that area. We like Rocket Lab an awful lot, but we've seen. It's no secret that SpaceX is going to launch their IPO this year, and it's going to be. It might be the largest IPO that's ever been launched. It might launch at $1 trillion valuation. We'll see. And of course, that will make Musk the first trillionaire out there, which is going to be interesting to see. But Rocket Lab, Rocket Lab is the leader, sort of, in the area that's not involved with SpaceX, because they actually have contracts and revenues that they're signing up, and you can see that the stock is broken out to an all-time high territory while the market has corrected. So you can see the correction there from 74 to 37. That's that's the correction that we went through from October to December, and we think that now it's got a sustainable uptrend. It can certainly come into the 10-day, which is 80. So we definitely wouldn't chase it here, but if the stock sets up and gives you an opportunity at the 10-day or 21-day, it might be an attractive candidate. You got PL that's also in this group, and this is just this is too extended right now, but that's in the group. Planet Labs, Lunar is also closed. They closed a buy today. They're in the group. in this space exploration area. So you've got a number of stocks that are participating. ASTS is one we're trying to get our hands on. Our hands around really the fundamentals of this particular company. We traded this stock a couple of years ago, but what ASTS does is they provide satellite to cell phone connectivity, and they've got the contract signed with Verizon, T-Mobile, AT&T, which represents over 1 billion potential clients, where you can connect your iPhone or your Android phone to satellite on a pay-per-view basis, pay-for-use basis at any particular time. So we think that's a dramatic change and dramatic efficiency that's going to lead to just tremendous growth in revenues. So we know that Starlink leads that. They certainly lead this category, but ASTS they can be a dominant player. You can see it's very, very close to breaking out at 102.79. So we're trying to get our hands around it to see actually when this service will be launched by Verizon and AT&T and T-Mobile and so forth. So it's on our own deck list. So we're doing some work with this right now. But with SpaceX coming with their IPO, it might create just a rash of buying in this particular space. So we think that Rocket Lab and others are going to be beneficiaries and can move. We're just looking for an opportunity to get in.
Mm-hmm.
Lilly is one that we're also shadowing. We're trying, we've been in this Lilly before. We got kicked out there on that correction from right there. It went down 12 straight days, and we had to sell the position. We haven't bought it back, but we're looking at potentially getting, adding back, if this would have some type of shakeout to the 50-day. But it tried to break out a couple of days ago. It wasn't ready, but we think that they've got a tremendous pipeline, not just in the obesity GLP-1 drugs, but the painkillers. They have just a huge stable of potential drugs that are on the market, and we think that it's a potential leader, and it's got really, really terrific numbers. You can see the earnings there on the left is projected to have earnings growth of 38% this year. So that's very, very strong for really one of the blue chip companies, on the exchanges today. So that potentially has, a lot of upside, and, certainly in the blue chip area, it's, they dominate the obesity space, and we're interested in it again. One of the strongest areas, guys, has been, and we don't know. We basically don't know what to do with the memory companies like Micron and SanDisk. We don't know if this is the beginning of a multi-year run from here, and it's just going, or if these stocks are blowing off to the upside. It's just a real difficult position for us, and we just feel like we definitely missed this particular trade, but it's certainly got a lot of attention in the marketplace right now. The analysts are looking for, there's a shortage in memory, flash drives and chips and so forth. And because of that, all these companies are raising their prices 20%. So we don't know if it's a one-time deal like the tariffs, or if this is going to be something they'll continue to be able to raise prices. But just it's out of position for us it's out of position for us, currently because how extended it is.
Right. We can go through a couple. Some people have. Here's a few stocks if you want.
Yeah, sure.
That we can take a look at. A few of these, of course, on our radar. Um, um, I'll just pull up Credo. Credo first.
It's back over the 50-day, today. So it's back over the 50. It's got terrific numbers, but definitely a wide and loose pattern. But you can see the stock is etching back above the 50 days. So it's certainly, it fits the bill in terms of being a prior leader. Look how wide and loose it's gotten. So it just needs to, calm down, put in a little base, and it might be, certainly okay. It's, we definitely like the idea that it's back above the 50-day today.
Mm-hmm.
This is, Comfort Systems, they're right in the middle of the data center plays because a lot of the data centers currently need cooling systems. VRT provides cooling systems along with Comfort Systems, which is FIX. So great action, in this particular stock today. It's one of these stocks that you don't really, know a lot and hear a lot about. It's one of these long-term leaders that are, that's in a great uptrend. The stock definitely is, it's definitely showing itself right now. So, I think it looks great.
Yeah.
DigitalOcean, just looking at it from a technical perspective, the numbers aren't, the projected numbers aren't great. So, the numbers aren't great. The growth is subpar, but the action of the stock isn't bad. So, it is in the enterprise area, which is a weak area. So, it's in a weak area, but in terms of a group, but the stock is performing, okay, but it's, it is quite volatile. You can see, very wide and loose. So that's a difficult one.
Yeah. And then, oh yeah, what is this? LQDA? I don't know that.
To print tech.
Yeah, that's a tough one.
Tough, small company, a tiny company, a $3 billion market cap, small number of shares outstanding. It's very thin, but you can certainly see, you've got pretty good action here. Certainly the last 3 days, you can see the volume that's coming in. And again, this might be consistent with what we're seeing in terms of proliferation of setups. So, this is a stock, we haven't heard of that's actually showing itself right now. So it looks very interesting. It is in that biotech area that we're kind of, we're sort of sworn off to because of, the volatility in the space, but it certainly is shaping up here with a great technical picture and, excellent earning projections for this year.
Great. And John missed EVCO. Well, same.
Oh, wow. Well, John, we did too. Building.
Yeah. Manufactured
Uh-oh.
homes. Well,
Yeah, you normally don't miss much, John, so I'm surprised. But breakout there, nice breakout over the 600 area. Really, really blue chip numbers. 20% growth, small market cap. I don't know what the theme is. Manufacturing home, maybe just manufacturing homes. Maybe it's a play. It's probably a play on the housing market. So again, manufacturing homes are a great way of playing in the housing market, and it's certainly looking. It definitely for us. It definitely suggests that we need to do some work with it. I don't think the move's over, John. If we're just getting started, And this is one that's clearly broken away from the pack. So thank you for that idea, John.
Yep. Isaac, he's asking about crypto, and I don't know. I figured I'll just pull up Bitcoin actually here. And I mean, our thoughts on it are, we got burnt when it went to all-time highs here, right? All-time high breakout back in October. And then you had this deleveraging event 4 days later. And then I think we tried to buy it, bottoming too, even here, and got stopped out again. And clearly the bottoming process, we think has taken place. And, we don't own any right now. We don't own Bitcoin or Ethereum right now. But we do, have some things levered to it. Figures our number one play for having leverage to that. And Robinhood is going to have some of that too. So like Roy mentioned, we're probably going to see Robinhood gap up if Bitcoin, sustains this, if it's, it stays up here at the 95,000 or so level. So those are two ways we're playing crypto. I mean, we're still positive on it in general over time, but it didn't act great, obviously. I mean, this is, it's one of the things that hurt us probably the most last year, because we tried it several times, and got it right once or twice, but got it wrong maybe three or four times. And but yeah, it looks like it's bottom. I mean, a lot of volume picking up right here, a lot of volume spiked down, a little bit of a recheck here, and you can see the volatility has calmed down quite a bit. And it took out that 95,000 pivot and everything. So look, I mean, I think we're still positive on Bitcoin. I think that I still think that if Bitcoin works, Ethereum is going to work, and I think Ethereum should work to a greater extent. I do find that Ethereum story more interesting, but I don't know any Ethereum at the moment. But this has a potential to surprise. I mean, gold has done the exact opposite, and silver has done the exact opposite of Bitcoin, to our sort of dismay. We didn't participate in gold or silver, and just kind of picked the wrong horse when the same exact fundamentals should apply, right? You would think silver, the commodity, should rally in the face of a bunch of liquidity, just like Bitcoin should, and Bitcoin just didn't. But that action right there on volume down, a couple of good days of volume, makes me think that the low is in, and it looks like it's so funny because I always talk to Roy, and I'm like, the only thing that matters for Bitcoin in the near term is technicals and positioning. And so it's almost as if all it needed was to get above the 50, and that's it. So Bitcoin now above the 50, acting a lot better. Breaking out, pulling back, and now taking out the high again. Today is
It's a buy signal. Yeah.
It's a buy signal, and really you should have been buying it down. You should have been buying it here.
Yeah.
Given that the volatility was so low right there on that pullback. But it is, so it's it's a buy here, and you never know. It's because overhead's always a problem, and like I was saying how if technicals are all that matters, okay, you'll rally to the 200-day, and then pause, and who knows what happens from there. But that's the first objective, I guess, is to get to the 200-day. But I mean, I think we're still
excuse me.
I said we're still positive on it, fundamentally, but the chart, the asset did not agree with us for the last 3 months. So, no change really to the thesis exactly.
Pull up IBIT on Market Surge, Wes, just so you can see it a little bit better. See, this is the break above, and that's what Wesley was talking about. You had that move to the 50-day, 5 or 6 days ago. It came in right back to the 10-day, and then broke back above the 50-day today. Now it is a declining 50 days, so it's that's not the an ideal situation. It doesn't mean that that there won't be some hesitation or some starts and falls on it, but it did get above the 50-day today, and the 10 days above the 21 day, 21 days above the 50, and it's above the 50 today. So this is the first time that it's really set up, in this, early, uh, a regular setup. It's been the first time in a lot, in a long time since it's been below the 50 day. It's back above the 50 day today for the first time in several months. So something to keep on your radar, and we certainly are.
Yeah, and I mean, someone happens to ask about Mister, but I don't have any thoughts. I mean, really, maybe apparently I mean, the multiple to net asset value is 1 now, so there is no premium. Um, I don't think it's worth. I don't think it's worth buying at this point.
Yeah,
I
it's
think
just
the hedge funds won with their logic. Their logic that is ultimately unbeatable, which is why is there a premium when they are paying debt? They're paying interest on debt so they're basically just paying for the privilege to hold Bitcoin, and they were using that premium. And Roy and I were also talking about how, okay, the premium could be justified maybe a year and a half ago before the ETFs existed, but that's because it was the only way to play it, right? And so, as those ETFs launched, it just became less important. I was wondering when it did launch. When did that if it launched back here, January 2024? I mean, Mister did continue to make higher highs from January 24. I was just curious there, but I don't know. I don't see the appeal at this point versus just Bitcoin.
yeah, I agree.
Roy, he's asking about silver.
Well, I thought about shorting it. I almost pulled the trigger today in terms of shorting it, and I did
Yeah.
not. So there's a debate going on whether and commodities might potentially move here. I was looking at the DBC and also the DJT in the commodity area. Uh, but there's a shortage in silver, and I guess it's still, silver and copper. I guess they are industrial metals. They are used in industrial applications.
Yeah.
But technically, this looks like a blow off top. Looks like a blow off top, particularly with the 3 consecutive gap ups in the last 3 days. So I definitely would not buy it. I would be more inclined to short this, tomorrow on a gap up, to just short the gap up. With the move back, certainly with the move back down to the 10-day, I'm just speaking from a trade where you could short it at 80 and cover at 70, or maybe even that 21 day, which is around 68. That would be a short term target if I happen to get right on the short side. I think that was an excellent. I think that was an excellent execution, Daniel, by
Yeah.
you, by taking profits in it today.
Yeah. Yeah. We're we're kind of just viewing it from the sidelines, but we do think about it and just to think how would we handle it? And we were saying I don't even think we'd be in it right here, at this day. I think this would have been the initial profit taking day. I mean that's a monster move on that day, 9%. So kudos for you. Getting some more out of that. That's great. I don't actually have any. I don't have any thoughts on international markets. I don't. But
Yeah, the VXUS, that is the world markets XUS,
yeah,
VXUS, and same thing. This
yeah,
same this is the same one. Um, we're not probably going to do a lot in the international market. Certainly not buying individual stocks, other than we have China's a big market, and
true.
Baba and Baidu. and K-Web.
Yeah.
They're potentially shaping up. There's Baidu, and Baidu, of course, is in AI, and they're in the autonomous driving area in China as well. So that's sort of setting up. But you've got that Chinese risk that you know we're, that we're debating whether or not we want to take a position. But K-Web, Baidu, Baba, Futu, FUTU, which is a brokerage firm in China. They've got really strong numbers, and this is one that's got our attention.
And
It
by
doesn't
the
have
way, I
the
don't think this
volatility.
is real for 2026. That down 85%. That similarly showed for Baidu down 85% and Baba. So something's going on with the Chinese numbers that there.
Yeah,
Um,
not a bad chart right there. Not a
I
bad
know.
chart.
Yeah.
Futu.
Yep. Um, let's see.
Oh
On
yeah,
this, he's asking about a couple here.
yeah. Amid this is yeah, and these are really in the drone areas as well, and that's really that's an interesting area. It's really showing some strength right here. KTOS, and it is they're clearly hitting our radar. Look how fast the stock is, come back and made new highs. It's definitely very interesting here. So you've got KTOS, you've got Carmen, KRMN. You've got, like you said, AVAV, ONDS that you pulled out. You've got RCAT that's in the drone industry as well. So that's definitely got our attention, Amit.
Yeah.
Yeah, thank you for bringing those up.
And JBTM. I actually don't know anything about it.
Don't know anything about it.
Food processing machinery. I don't know.
For air transportation. Uh, Not, it's running under the radar. That's what I can say. The revenue numbers looks like the revenue numbers are really strong.
Yeah,
I would,
that looks like a merger to me. You know what I mean?
it does. Yeah, it
Um,
does. Yeah, yeah.
where where it went from five, so they just doubled the company. So just to look into that, I'm not sure if you've got a position, John. Definitely make sure you're not doing that. And so in reality, you've got doubling of earnings or doubling of revenue, but earnings are going to grow modestly, and that's probably cost synergies or whatever from the merger and things like that. So um, that's a clue that you've got 10% earnings growth on 120% revenue growth. That's a clue that that's probably happening. It doesn't get me super excited unless you've got a merger model or something and you want to
Yeah.
you think that they can surpass the cost synergies that they've guided for and things like that.
Now, VIAV is in the optical area. So this is one, this is a little intriguing. It's thinly traded though, but it's in that you can see it's the number one group there. But it doesn't have the scale that a GLW or a Sienna or a Coherent has, but it's in that group, and you can see where we got an alert there where it broke out to all-time highs. It's come back in and just kind of sitting here. Earnings are in. Looks like 16 days, but it's a little intriguing. It's definitely intriguing.
All right, I don't see any more that we haven't touched on. Is there any others, Roy, that you wanted to
Let me just
mention?
see. Yeah. In the COS, FN, Jable, San Mina, TTMI. So these are, this is in the contract manufacturing area. So, the group's pretty good. You're having some, pretty good action in a number of these. So we're sort of quietly monitoring this space. You got COS, you got a JBL in the group. Got JBL in the group. The numbers are pretty good. You've got San Mina, SANM. You've got TTMI that just broke out today. It's in the group. So big breakout on this today. I don't know what that news was, but that's exactly what you want to see. Big breakout on big volume. And there's your catalyst right there. So TTMI is definitely the leader, in that contract manufacturing area, TTMI. So put that on your list. And looking to see if there's anything else. We don't pull up like the power companies like Oklo. What do those look like now? With Oklo and SMR. So the problem with, we know that there's a power there. You've got power constraints in AI, and and that clearly has to be fixed. Microsoft had news today that they're going to explore ways to make sure that that the general public doesn't have to pay for higher electricity. So that's going to be interesting. Maybe that's one of the reasons that that BE also followed through today. But these companies like Oklo, they don't even have a product. So we're avoiding the Oklos of the world. Just like the quantum stocks, we're avoiding. They don't have any revenues, don't have any earnings. So we're avoiding Oklo and SMR. But we really think also that down the road, the nuclear is a great a way to solve the problem. But the problem with nuclear is it takes 4 to 5 years, for you to build a new nuclear facility, and with billions and billions of dollars. So the earnings aren't going to be, aren't going to be, close. You've got the companies obviously that's in that area that's leading a CEG. That they signed some long-term contracts with, the hyperscalers, but it's kind of, you can see, it's trading, pretty volatile in here. So that would be one of the leaders along. There's VST. We had played this before. GV still represents, I think, probably our next best way of playing the power area, because they're in all the different areas in terms of the nuclear space. They are the leaders in gas turbines in the world. They're sold out for the next 2 years. And you can see it bounced and held on the 50-day. We got shaken out of this. They came out with earnings guidance there, and it broke out to 731. And we bought this stock the next day, and subsequently got kicked out and took an 8 to 10% loss on that day that Wesley's profiling. Like, it just didn't act great. And that's that's why we were still lightly invested until just recently, where things just started showing better action. So this, it's held the 50-day. This is one that we would definitely be interested in if we can have a legitimate entry in it.
Yeah. Someone asked Jose, he asked about FN, and I guess I was in the same. We just didn't pull that one up, I don't think. But when we were looking at the other.
Yeah, Jose, when you're looking at these, you know, the one that breaks out the first is the leader. So, TTMI is the leader in that whole category. So that's the one that I would focus on in the next few days.
Yep. Here, someone asked about A Lab. I mean, I would say A Lab to me, it parallels the Credo. It's sort of the next generation type of data center hardware things. And peaked. I don't know, shaping up. That's nice.
Yeah,
We'd like to see everything participate. It has great numbers too, right? It's got the triple digit numbers, and that's why it was on our radar here. I don't even know if we owned it last year right here. I know we owned it in this particular part. Um, I think we owned it at the end of the last, more than a year ago, but yeah, it's still worth following for sure. Nice to see again for us. It's very simple criteria. Get above the 50-day. You know, that's the step in the right direction. It does seem to have the fundamentals. It reacted. Well, I don't know. I don't remember what day this was. What happened there? Um, but yeah, it's shaping up. I
yeah.
don't really have a super strong opinion on it. Um, it's funny.
Now, some of
That's
the,
one of the what.
excuse me, excuse me,
Well,
I'm sorry.
I don't know. I was just gonna say on this day, Credo. I said I was between the two because I really grouped them in the same boat. I was trying to nab a couple of these stocks that were plummeting, and I think A Lab was down like 10% down here. And I happened to
Yeah,
buy it and then got stopped out that day, and it proceeded to rally like 10% for the next couple of days. So you see these things. It looks like things are carving out bottom. So um, perhaps when you're trying to buy things near sort of in bottoms, you can try to buy in pullbacks. I don't know, but I
uh, yeah. I wanted to point out that, by the way, TSM reports Thursday. So that's going to probably be an impactful report.
yeah,
Taiwan Semiconductor, they're the largest producer in chips in the world. And remember, NVIDIA is fabless. They manufacture all of NVIDIA's chips. You can see that this is leading. It's a leading semiconductor stock in the market right now. So that Thursday reports can be important. So be
yeah,
sure and watch that. Uh, the financial companies are just starting to report. I think Citigroup, Wells Fargo, Bank of America, they all report in the next couple of days. JP Morgan reported today. They sold it down on
surprising.
the miss,
Yeah,
but
surprising, and
the area looks still
yeah,
promising.
right. Like look at what's holding up. It's the investment banks have held up a lot better. XLF got hit really hard with JP Morgan, and the regional banks also held up a little bit better, or a lot better. So it's interesting that the mega caps kind of took the hit, while this is probably where you want to be,
Yeah,
whether it's banking revenues or trading revenues, that they're about to have a great year, perhaps. Perhaps, right, you just get a couple of these. I mean, you might be thinking they're pricing in SpaceX IPOs, OpenAI IPO, Anthropic IPO. These are, I mean, the biggest deals of all time that they're that's possibly what they're trying to price in, right? Those are significant revenue drivers for them this year and the next couple of years. There's a lot, there's more prospects for IPOs than we've seen in a long time. Extremely high profile, and they're going to be extremely high value uh, as well. So, uh, holding up nice.
there are two companies sort of in the power equipment area that look interesting to us as well. One is NVT, Invent Electric. You can see that it's got pristine numbers. So it's they're involved in a lot of different areas, from not just the grid, but in the expansion space, along with PWR and MTZ. But electrical power equipment. So you can see the chart with very, very strong numbers. Running under the radar, but this company's got really good numbers, and also sort of in that area, Dycom, and you can see that just had a nice move today. That's on the cusp of breaking out as well. You can see the numbers there, very, very solid numbers. So this is something that you might keep on your radar as well in the telecom infrastructure area.
Mm-hmm. All right. All I got.
Wes, that's pretty much it, I think.
Yeah. I think we can wrap it up right about 2 hours, and
Yeah.
cool.
Okay, well, guys, we'll go ahead and close the presentation tonight. Again, thank you so much for attending. We hope that we shared some concepts that might be useful for you, some ideas that might make you money. Again, this is an exciting time, and this is certainly the time to continue to put your head down, do the work, do the research, because when they happen, they move fast and furious. So try to find those fast and furious moves. We're certainly attempting to do that, and we look forward to seeing you next month. And again, you can follow me on Twitter at Roy L. Maddox, and I often tweet. And we look forward to helping you navigate the markets in the months ahead. So thanks for attending, and we'll see you next month.